Morning traders, Paul here with GammaEdge. Today is Thursday, the 20th of July. Let's get started. Pause your players here. We want you to read to the very bottom. If you agree, hit that play button. Summary for today, we've still got greens across the board. Short-term market model, we have another continuation day. This is where our cumulative tick, the shortest term CT crossed above the previous day. This is a day 3 continuation. And the railroad track pattern, which you'll see in the next slide, has a continuation day also. Long-term market model, which is what we call the ribbon, remains in an uptrend. It's continuation day up, and you'll see that very clean lower left, upper right type of pattern here. Overall, we're mature. We do note the possibility of a reversal as we push towards 4,600. Just be aware, we can go either direction. This is not a predictive model, but it does show momentum. The too long didn't read of today's summary really is that today's the last trading day for the AM settled SPX. There is no obligation, of course, for them to monetize today because it is a cash settled index. That being said, we do expect a little bit more rotation as a lot of the in the money deltas are, which are very profitable, are now going to get rolled out in time and to lower strikes to take advantage of convexity, etc. So we may see some weakness. Just be aware of that. The PM complex, overall, we are extended above it, but we're not very worrisome. We did see plus GEX, which is the dominant gamma exposure for the PM complex, move to 4,600. We consider this bullish, and it follows the advance of COI. We noted this yesterday. We talk about this. We have a scan for this. It's a very powerful back-tested scan that has a positive edge. Minus GEX, it's really undefined due to the JPM short calls all the way up there at 46.65, although those are at the end of September. They are present. They have an influence. The fact that we have that dominance up there is something we can talk about, not in this, but we do talk about it in the Discord. We are called Delta dominated above and below spot. This is overall bullish. It's a snapshot in time, but nevertheless, just note that the structure is solidly in control of the bulls, both above and below. Combo complex, the transition is loosely defined. Plus GEX is clearly indicate, or plus trans, excuse me, is clearly indicated, but minus trans is way far below us. So it's difficult to draw conclusions on this except to say cautionary. If we fall down below P-trans, which is at 45.15, things in the market start changing, and that's really the takeaway that you need to know. Now, the combo complex is the mothership. That is the AMs and the PMs, so it is all 18 million SPX contracts, and as it goes, the market goes, so just be aware of that. We too here are delta dominated above and below. That is important. We consider that bullish. And we see no signs of put dominating in the money or out of the money strikes. That means there's no cracks in the ice. That means we are really solid all the way up to 46.65, which is where that JPM strike is. Zero DT, folks. We have lots of them in the Discord, and they like the tools. Zero DTE plus trans 45.65. That's almost exactly where we closed, right? So that's important. Minus trans is 45.60, right below us. So we have this, we're right at the transition. We have a very tight transition, so the bulls and the bears are well positioned for either direction. There's no ambiguity here on a line in the sand. So that'll set up your if-thens. I won't go through them. They're there in green. Make sure you read them. Make sure you internalize them, and you know how to interpret. That'll be very important for your paper trading. We do see parking areas, several of them developing, but they're on the shorter term, the 0DT, the 1DTE, and some of it's influenced also by today is the last trading day for the AM settled SPX. So just remember, could have a little bit of movement, falls outside the normal interpretation of the structure, but nevertheless, we do think the upper and lower ranges are pretty well determined. Market model, over here on the right-hand side, TC21, continuation day. For those of you in the Discord, you know exactly what this means. If you are in the Discord and you don't know what this means, you haven't looked at the information we've provided here. Ask one of the admins or the mods to help you. Bottom line, you can see the white bolded line is continuing to move up. That is a criteria. You can see the railroad track pattern, which is the three white lines below the bolded line. They are now in an uptrend and very clean. And then you can see the colorful ribbon. The colorful ribbon showing the red all the way down through the cyan color is in a lower left, upper right. So this too is bullish. So across the board, we could always see some weakness, like you see in the middle of the picture. But you can see that clearly resolves itself within a longer uptrend, and that is why this model works, because it allows you to know when the pullbacks are occurring, position accordingly, and then get back in and see what the overall structure is. Gamma levels we're watching, just want to note the 3700 strike in the PM complex, which is on the left-hand side here, did turn red in the deltas. That's an interesting thing to consider. Just note that we are starting to see perhaps a little bit of a shift, but 3700's a long ways down, and the fact that it did appear is notable, but it's not something that we are obviously very worried about because it is way far down. Looking at the gamma, starting with the PM complex, this is just the PM complex. Note that the transition from plus GEX to COI, which was at 4550 yesterday, has now gone up to 4600 as we talked about yesterday, and like I said, we have scans. We don't see any further upside beyond the 4650, not in the shorter term here, but we have a clear runway to go north in terms of delta domination. So the out of the money calls are dominating above us, the in the money calls are dominating below us, and this is a big deal. The blue box shows you transition. The one thing that I do want to point out is in the upper right hand corner, you see I put a red box around the gamma exposure. It dropped a fairly good amount relative to yesterday. We feel this is significant. These are puts going in, excuse me, short calls going in, long calls coming out. It's a combination of all three. It just depends on where it is within the structure. When we see this, we could have an indication of a pause. Not a pullback, not a reason to sell everything. Just be aware the markets are stretched. They may need to digest, and we're in the middle of OPEX, right? So we've got today and tomorrow going on for all the monthly expiries. 0 DTE. Pretty clean structure, as I said earlier. The 4565, 4560 zone, very clear indication of your line in the sand. Start developing your if-thens. Want everybody to be able to do that. Two notables here. 4590 is indicated as plus GEX, whereas the COI on a single expiry day is 4600. The difference there is going to be material. You're going to see it here in the 1 DTE. We want everyone to pay attention to this because deltas and charm will be impacted depending on where we are in spot price and moneyness with respect to this. And you need to be able to segment through those different scenarios so that you know what expected behavior of the structure is going to be. If that is confusing or new to you, please come into the Discord, ask questions, because this is really how you read the tea leaves. 1 DTE, this is the PM settled only. This excludes the AMs, which expire or settle out tomorrow morning at the open. What this is basically telling us, we got a little fatter transition. That's not great, but it's not poor. We're slightly above it. Again, not anything to worry about. 2 parking spots shown in orange, and note that structure, that 4590 and that 4600. This is for tomorrow's PM, right? So the AMs are off the table. This is just what we're playing with projected out into tomorrow. So this is our crystal ball view of into tomorrow. So you can look at that 4590 is still very much in play, and where we are today in relation to that will have a significant impact into tomorrow. The other thing to look at is the 4560s. It's a fairly dominant line. It's in the money. The charm is going to be supportive, and that's going to push those deltas upward. That's where we're going to force the dealer's book lower. And so if we are above 4560 today into the close, that'll be a good start tomorrow as we move forward. The combo complex is pretty important here. You can see that double structure. This is adding today's AMs, which settle out in the morning, as well as tomorrow's PMs. And you can see the 4590, 4600 strike. You can also see those 2 orange arrows pointing to what we call delta nodes. Those are Historically, those have been good parking spots that we see. These are areas where we believe the dealer has low exposure to the overall market dynamics. So just be aware of that. Doesn't mean we're going to go there. It just means something to pay attention to, because if you can get cheap trades up there, that could be something to do as a lotto ticket, much better than the nationwide lotto ticket. Combo complex, pretty clean. Transitions broken. 4515 clearly indicated as P-trans, no ambiguity there, and so 4515 all the way on up. We are in a call-dominated gamma structure all the way up there to the 4665s, which are the JPM strikes for the end of September. You can see the 4655s have got a delta change. So there's a pocket up there around that, copycats, whatever the case is happening, that's happening up there at that 4665. Just be aware of that. We are smack dab in the middle of the gamma glob that we talked about last night on open mic. I think the key takeaway here is the 4600 that you see is a dominant line. That is clearly the target for the combo complex, and it's something to pay attention to. Little bonus chart. This takes us beyond this week. This is the crystal ball view into next week, into the end of the month. And this is looking at basically the more of the same. 4600 is indicated as a dominant line. You can see the 4540 and then 50, 60, etc. as support below us. Those are in the money right now, right? So depending on where we end the day on Friday, we could be starting with a really, really good structure into next week, which is unusual. Typically the week after an OPEX is weaker. This is suggestive of not so much. The other thing to pay attention to is that we've got the 4550s as next week's indicated COI. Now that is the dominant call expiry for the week. Sequencing will matter, how we sequence through the days. But just be aware, those are in the money, they're near the money, and those deltas and charm are going to be very, very supportive. And as a dominant strike, that is something that you need to understand and know the moneyness of that. Excuse me, because if we're above that, that's one thing. If we're below it, it's another thing, and it matters. Again, if you don't know how to address this, come into the Discord and we'll help you think through that. Final picture here, a couple things to point out. So first of all, starting over on the very right, that's the 5,000 strike with that green arrow. It's growing. So there are a lot of folks who are thinking about the 5,000 strike on the long side. 4,700 is growing. This is about where we were 2 weeks ago for the 46, and now you can see 46 is clearly indicated and where we are. 45.50, 45.25, all decaying because they are in the money and people are taking their profits and rolling them around. So just be aware of that. We do consider the 44.75 a line in the sand. There is some weakness above that. You can see that negative gamma. So really a loss of 45.25. I would be taking some of my long deltas in my paper portfolios off the table, because nothing here is a recommendation to buy or sell any security. We paper trade only. And if you think about it, you're getting into kind of a quagmire below that 45.25. We need the structure to fix itself, and right now it's not. The bulls and the bears are not clearly fighting the battle, and so the lines have not been drawn. Also want to indicate here, we saw the drop down to 4,000 in minus GEX. We see the growth of the 4,300 line, which is positioning for a downturn, and that could continue to grow. That would be good. I'd like to see 4,350, 4,400 also grow too, as people have a natural random type of purchase on the quarter levels or half levels, and have the distribution be a typical log normal type of distribution. We're not seeing this. There is no fear in the market right now, at least not down to 4,300. Nobody's positioning. They're just buying the cheap convexity that's down there. So they're buying insurance when they can, which is not a bad thing. And we would advocate always making sure that you have some sort of hedging strategy in place, which is obviously slightly more advanced because these are a weight on your portfolio, so how you pay for those is important. Nevertheless, be aware, loss of liquidity below 44.75 all the way on down to 4,300. It's ugly. If we do lose 44.75, if you're going to play the downside, you're going to want to get in motion pretty quickly. So that's it for today. If you have any questions, comments, want to come in, kick the tires, go to GammaEdge.us. Upper right-hand corner is a pricing tab. Fill out the blanks. Come on in. You will get an email from LaunchPass. In that email will be a code. Send that code not to us. Send it to the LaunchPass bot. It's right in the instructions. Twitter, follow us on at GammaEdges with an S. And then here on YouTube, two things. If you like today's commentary, give me a thumbs up. It gives me immediate feedback on providing content that you find valuable and actionable. And two, subscribe, because we post videos and we want you to know when we post videos. So with that, bid you farewell. Make it a great Thursday and hope to see you in the Discord. Thanks, everyone.